Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs by Sheraz, Mian, and we've brought you two interesting stocks this week. You probably aren't paying much attention to either one, but you probably should be because the fundamentals look really good. So, Sheraz, let's start with you.
Sure.
Because I didn't know anything about your stock.
Yeah, it's a specialty chemicals company called NGVT. Maybe I'm mispronouncing it, but that's how I'm pronouncing it. And the ticker is NGVT.
Okay.
It's about 3 billion market cap, about 1.2 billion in sales for 2018. That's a double-digit growth in revenues for the company. It's a relatively new company. It came out as a spin-off from WestRock, WRK, which is a packaging, paper, kind of this forestry products type of a company, which itself resulted from a merger between two other packaging type of companies. So they spun off their specialty chemicals business. And so that happened in mid-2016. It turned out to be an amazing timing for the parent company and the shareholders of NGVT. The stock has literally been on a tear. Very impressive product portfolio. Two businesses essentially that NGVT is in. One is what they call as performance materials, and the other is performance chemicals. Performance chemicals is the traditional specialty chemicals, meaning it's crude-based, a variety of specialty chemicals for adhesives, lubricants, tar, and all those kinds of stuff. It's the performance materials that's the crown jewel. Which makes NGVT the global leader in vapor emissions for vehicles, for cars, trucks, boats, and all of that. And it is this performance materials business that gives the company very strong growth and very visible growth. So one of the few players in the specialty chemicals business where you could say that the top line growth, the bottom line growth, and the margins growth is not only impressive, but also sustainable over the next many, many years. So they recently came out with targets for 2022. And what that shows is that it's almost 10% top line growth.
Wow.
Mid-teens EBITDA growth, and EBITDA margins close to 40%.
Wow.
Now, you don't really associate those type of numbers with a basic materials or a chemicals player. So the stock isn't as would be expected. It's not cheap. But not nosebleed expensive either. So it trades at around 21.5 times forward 12-month earnings. The specialty chemicals space as a whole is about 19. So not terribly expensive. It has outperformed the materials, the specialty chemicals, as well as the S&P 500 ever since it went public, and that has continued in 18 too. So a very good story. As I mentioned earlier, it was on my short list for top 10 for this year, and just barely stopped short of there. So I'm a little bit regretting that I didn't add it there, but did add it to the focus list.
Yeah, it sounds like a really interesting play because most people don't know about it, and it has incredible numbers for that sector. I know I own some specialty chemical companies in some of my portfolios, and they grow at a much slower rate than what you're saying. So now I'm like, I'm kind of interested in this. It's one I'm definitely going to be watching. I brought one of the fertilizers, which people are more familiar with, obviously, but nobody's been talking about them for the last 2 years. It's been real tough slogging for the fertilizer sector across the entire sector because those prices have come way down. You know, there's nothing you can do. It's like what happened with crude. When the prices come down, they close some of their manufacturing facilities. A lot of them cut dividends. They just try to, you know, save the cash, stay in business, and ride out the storm. But it does seem like that we've finally hit the bottom in the fertilizers. So I brought Mosaic today. It is on the potash side. one of the bigger potash and phosphate fertilizer companies.
Sure.
They actually just acquired the fertilizer business from Vale down in Brazil, which gives them much bigger international position. Yeah, they paid a little over $1 billion for that. They still have $1 billion in cash sitting there waiting maybe for some more acquisitions. So they manage the business well. But as you can see, the estimates are starting to rise here pretty dramatically because finally the analysts believe those fertilizer prices have bottomed, and we're going to see, some growth here in that, and that's all that it takes for these estimates to rise. So maybe the worst is over. It looks like it. Just in the last couple of months of 2018, potash has hit a 2-year high, and the phosphate's similar. So it does appear that the bottom is in. Farmers are doing better. There's also a drought down in Argentina, and that's affecting the soybean crop down there. So U.S. soybean farmers spending more money now on the fertilizers because they see a big opportunity here to get their crops into those markets. So chart is not too pretty, except if you bought it in 2017, if you were betting on those lows, if you finally jumped in there. Does look like the shares finally bottomed there late 2017. They have a pretty good track record in the last couple of years of actually beating on the lowered estimates. But that hasn't been the story. It's really been about the fertilizer prices, and we do see the gains here. And the company has now said, they see some momentum going into 2018. So for the first time in a couple of years, I feel like the fertilizers are feeling more positive, and that says a lot for these players because, again, nobody's really been paying any attention. And why would you with what the overall market is doing and you see this chart? I mean, it's been on a downward spiral for the entire time that the rest of the market's been on the upward. So as far as valuation, it's trading similar to what your stock is, right around 20, 21 times. I wouldn't say it's really cheap, but you know how these commodity plays work. The estimates always kind of drag a little bit in the beginning as even the stock starts to rebound up. So they never seem really cheap at the bottom the same way. But yeah, I like this whole sector. I've kind of been feeling around in there for a lot of the players. All have really high Zacks ranks of 1 or 2s. So it's a good place to look if you're looking for that high Zacks rank.
I agree. I agree. Yeah, no, it's interesting that both of our stocks were these under the radar, under followed stocks, and we didn't go for the NVIDIAs of the world and the Google. So we did give some under the radar picks.
We did, yeah. I like these kind of hidden gem stocks.
Okay,
if you're looking for more stocks like this, we cover them all over on Zacks.com, so be sure to check over there. We have Bull of the Day with the Zacks #1 strong buys every day of the week, a new one. You can check those out, as I said, over on Zacks.com. So we'll see you again next time.